No worries.
There we go. Hello, everyone. Back again this week with three cool projects and founders. Last week was kind of the kickoff for Union Hall, where we bring in parties that we work with to just see what's still cool in crypto, what's being built, and kind of dive a bit deeper in. Today we're here with Smokey from Berachain. So one thing that I'm really keen to dive into is post mainnet. Once the maybe pre-TG hypes down, how does a big ecosystem evolve? How do we see everything actually working out in the end? Like, is the main stuff that's happening on Berachain still puffball, or what do we actually see happening on the chain right now? Associated with that, we have Connor from Enso. Enso was, I think, a big part of Berachain's launch, with a lot of liquidity going through Enso and one-click deployments. And Altan from MoreMarkets as well. Altan, I don't know you as well, so I would actually love to hear a little bit more about MoreMarkets and what you guys do.
Do you guys want me to start? Or
Go
just,
ahead.
is there
Yeah.
is there an order? Yeah, I'm Altan, one of the founders of MoreMarkets. Before this, I was at Near. I worked really close with Ilya. We spun out of Near almost a year ago. We were actually at the beginning doing something else, which is Near DA, which is a smart contract on Near. But we can talk about pivoting as well as something that some founders had to go through. But what MoreMarkets is building is currently a unified, almost global liquidity marketplace, which essentially is currently focusing on idle assets, predominantly XRP. So if you want to get into the Ripple world, we can talk about that too. But we have a mechanism in the background that essentially pairs XRP with RLUSD, which is their stablecoin, and then can run strategies on Ethereum now, but eventually everywhere else. So that's in the front end, we just take XRP deposits, but eventually we'll take to Bitcoin and other sort of bigger assets as well.
All right, cool. So that sounds a little bit similar to Enso, or at least like in the tech stack, maybe. Do you want to give a brief summary of Enso, Connor?
Don't do XRP yet, but it's a nice market to enter into, I must say. Yeah, so Enso, really high level, is the shortcut to building on-chain applications. What this means in simple terms is we put many different blockchains, many different on-chain protocols behind one SDK and one API. So if you want to execute over 200 plus different DeFi protocols and combine them into DeFi Lego blocks, you can really do this quickly and easily with Enso. One team built an MVP without Enso in 7 months. They rebuilt it in a day and a half, right? So yeah, our vision of the ecosystem is put your money where your mouth is and actually ship products. And we were fortunate to work with the Berachain team on the Boyko launch as well. So yeah, looking forward to today.
All right, awesome. And then finally we have you, Smokey.
Yeah.
Go ahead.
Yeah, thanks for having me, guys. Quick context on us. Berachain is an EVM identical L1, turning liquidity into security, or helping to align liquidity and security at the network level, and using it to to help power the applications built on top of it. For a retail user, that really means that when you think about applications on Berachain, you can earn more in a sense for doing whatever it is you're doing. And for an application, it means that you really have the ability to use the chain framework itself to incentivize anything within your app, whether that is liquidity provision, volume on a DEX, playing a game, sort of everything in between. So yeah, that's the highest level for us, man. And we were fortunate to work with Connor and the Enso guys for Boyko, sort of our pre-launch program that involved bringing a couple $2 billion into leading applications across the chain.
Yeah, very cool. So one thing I've heard trends in these intros already is kind of like idle assets, putting those to work. You didn't really mention Smokey, but I know that was originally one of kind of the things that Berachain really focused on, right? With how do we get pay less for security, or at least like put the capital that's securing the chain to work as well. How has that kind of evolved so far?
I think the biggest departure we see from that as the market has evolved as well, and as activities that people like partake in on chain have evolved, is that I'd say the liquidity becomes, of course, increasingly important. But I think that what's even more important and downstream of that is volume, fee generation, active utilization of that liquidity. So I think that the one tweak, or the one almost like redirection in the model over time, is finding ways to make sure that the rewards that we or anyone else issue for that matter are really downstream of real economic activity. Simply because there's a lot of different ways that one can park a fuck ton of idle capital, without actually doing anything with it. And I think that, we got to see some of that during Boyko. We've seen some of that ourselves in other ecosystems. And I think what we're actively looking at over time is how do we make sure that the assets that live on a chain can both be, contributing to liquidity, but doing so in a productive manner, as opposed to just kind of like, being there for the sake of a number on DeFi Llama.
Yeah, so have you had to like transition a lot of liquidity or like focus on different programs since launch? Because you noticed there was too much sitting inactively on Berachain, or was it already, what I should might say, like quite healthy from the first few weeks on?
I think I think the initial craze, they definitely was like a good bit of volume, but I think that as POL sort of, gradually had rate limiters taken off, we got to see both intended and unintended uses of the system. And that in some cases we had teams who were like, just sort of trying to farm with idle capital. And then, over time we noticed this and have been putting in more and more guidelines, and I'd say trying to make the system smarter to encourage against that. I think that also kind of prompted us to think about the ways that the POL like structure simply at the at the implementation level could be extended to concepts beyond passive liquidity provision. And sort of when I mentioned this ability to incentivize anything, just to give people like a very high level thought process of how POL works, you're basically saying that there's a series of these different vaults or a series of different eligible destinations for BGT emissions across the chain. And there really needs to be a stakeable token of some sort that's approved by governance in order for that, token application pool, whatever it is that you'd like to conceptualize it as, to receive emissions. Now, the simplest thing that one can think of there is like, okay, I've got an LP token because I've provided liquidity in a DEX. I can stake that, boom, I can receive emissions. What gets increasingly interesting and what we've almost been like leaning into even more over time is tokens that almost represent an action and or a certain threshold having been met. So, for example, a token that is not that is actually a representation of the amount of volume that someone has done on a given platform, or the amount of fees that someone has basically generated for a casino product, whatever that might be, right? So to answer your question, Karel, I think that what we've seen is the application of POL outside of just passive liquidity and more catering towards active liquidity. It's not necessarily the easiest to measure. Like there's still sort of there's areas that can be tighter and that can be more effectively, I think, presented from like just a user experience and developer experience point of view. But nonetheless, we think the concept is pretty cool. And like a couple of apps that have used that to effectively 10x their volume, for example, over the span of a few weeks.
Very, very cool. So kind of it's like seems to be that the unlock is kind of like a second generation of tokens, where previously we thought there may be like not that much worth to it, right? Like the tokens that you get as a receipt for doing an action, but since now you can then effectively incentivize those actions downstream, you get this like secondary token economy almost.
Yeah, and I'd say that like, a lot of it's almost downstream of the user behavior in crypto right now, right? I think it's a vastly different scene from 2021 or, 2017 or wherever people have joined in at different points along the way. Because, right now, what do people do on chain? They trade shitters on Solana or Base. They trade perps on Hyperliquid. They yap on Kaido. Like the range of activities I'd say the average market participant is engaging in is actually a lot different, because I think the wealth creation effect has transferred more and more and more into explicit gambling, or explicit like directional belief in trading, which is to say, I'd say years ago it used to be okay. I'd like to play this intricate DeFi game of some sort that has like 3 degrees of game theory and bells and whistles and Ponzi's and whatnot. I think that we've kind of skipped that part. As in, I think that people are no longer like, yes, I'm going to disguise the lottery, or like, I'm going to disguise the funky game with a couple levels here. They're like, nah, if I want a lottery ticket, if I want to go to 0 or 100, here's how I'm going to do it. I'm going to see if I want to ape like suicide or whatever it was earlier today, right? So like, I think that that's something that has very much represented itself in the active liquidity on chain as well. And that means that exactly what you said, right? Stuff like different receipt tokens, stuff like identifying different businesses that actually make money and figuring out how to emphasize the functions of that business that truly make money are becoming more and more relevant, because I think we're seeing a barbell of like on one hand hyper gambling, and on the other hand like real businesses, or I'm not actually saying hyper gambling isn't a real business, but moreover, Web 2 adjacent businesses, or groups that just think about what are my cash flows, what are my revenues, what's my CAC to LTV ratio, being brought on chain from an efficiency point of view. And I think that space in the middle is becoming more and more sparse, with the exception of certain sort of institutional TVL farmers / power users. But I think that when you just think about that distribution of people, it's like, by numbers, it's probably 85 to 90% people just gunning for the lottery ticket, 5 to 10% people who are, trying to find a way to effectively leverage DeFi structures. And then 5 to 10% people who are like, okay, how do I build this business on chain, right? That I might have, had an inkling of in the Web 2 world.
Makes sense. Con and Altan, I think you guys have really boots on the ground in kind of this middle ground where people are doing real DeFi, maybe institutional stuff as well. Do you see the same happening, where it's a smaller set of users that are maybe doing these really complex strategies and only power users doing it, or do you disagree and you still see small users do this too?
Yeah, Smokey's users are probably different. They're very DeFi native, and they're there to kind of play with all the secondary tokens. Our target audience is quite different. We go after somebody that holds, let's say, XRP on Binance, doesn't earn much on it. Like Binance offers 0.8%. And when you give the money to them, they probably lend it to market makers or somewhere off chain that you really can't see how you make money. So that was the main thing that we saw. And we're like, I think there's a better way to do this. And the technology's there. I know you guys are building pretty much ZK rails between different chains. There's message passing that evolved, smart contracts, although there was a hack on Sui today, but it still kind of got better. The biggest hack of the cycle was Bybit, which was a social engineering hack rather than a technical hack. So I think the thesis is if the rails are ready and if DeFi is coming through, what do we do with the retail tokens that just sit idle on exchanges rather than earning 0.8%? Earn something like 3-4% on DeFi, which with stable coins. So we do 50% LTV sort of borrows against XRP, and it's going to be a bit higher for Bitcoin. And then run a strategy like MEV Capital will do on chain, and then return the yield back to the user on the XRP ledger as XRP using Intense Network. So it's a very complicated system in the back. But for me, the most matters is if you go to our Twitter and check the demo that's coming through, it literally looks like a very basic exchange app, something coming from 2022 when there were some lending apps that were off chain, but I want to take them fully on chain. So that's the vision. So the users are very different. Maybe they're not as big as Smokey's users, but there's that sort of crowd. There's obviously also the bigger institutions in XRP and BTC as well. There's large banks that still hold 5%. So those require not a DeFi setup, but more like institutional setup. So you can go to Fireblocks and mint sort of synthetic tokens for them. So those are the two different liquidity participants for us.
Makes sense. Do you see exchanges liking this, or are you basically taking away good money maker for them? Because I assume if they're paying the users 0.8 and you can get the users 4%, that right now exchanges are taking that difference, right?
Yeah, it's quite bizarre. I haven't approached the bigger tier 1 exchanges. Tier 2, tier 3, they like it because they want to put an earned product. They own the user. Obviously some exchanges might like it because they own the user, right? If you steal the user, they kind of but eventually, right, if you grow to be there, then it's another problem to figure out. But we're just a 1-year-old startup, so trying to figure that out as we go.
Just do a incentivized vampire attack against all the sexes. Migrate all their current earn positions over to MoreMarkets. Target 50 sexes.
Yeah, it's going to make you laugh.
I think it's pretty cool because you guys are unironically targeting one of the only things that people on chain in general are not looking at in the slightest, right? Very few people think of Ripple or the Ripple adjacent stack as a productive asset. And I've had this conversation with other friends before in the context of Ripple, Cardano. It's just these coins that exist and have massive retail holder bases that are on one hand, just zero fucks given. They don't care what's going on crypto Twitter on a given day. which is one of the best things that one could probably ask for in a holder base. And at the same time, they have pretty meaningful pools of capital. So I think the play is really cool. Do you guys expect to? So when it comes to the RL USD versus USDC side of things, I imagine that may get interesting depending on the outcomes of large scale commercial talks. Do you guys expect to see something outside of the Ripple universe as well, or is there like a reason that you guys went really hard on that one alone? I can understand it feels like this. It feels like the world, like Ripple feels like between the Bitcoiners and the Cardano heads, in that it has like a greater air of legitimacy in certain senses, and has that institutional narrative, whereas Cardano has like the blue collar narrative or something like that. Like, I'm just curious as to the roadmap or thought process there.
Yeah, so the thought process was, I mean, you're right, Smokey. Like I looked at Bitcoin and I was like, this asset was not active in DeFi. I mean, there's Babylon and Lombard now, and it's growing. I think Babylon has 6 billion and Lombard is close to 2 billion now. And we're like, what is the next asset that is quite institutional people? It's legitimate outside of crypto Twitter, but it's not that legitimate on crypto Twitter. It's something that we're like, we should go after this, right? It's a strategy and a tactic to grow like the company, because we did this pivot in March, right? So like it's been maybe 1 or 2 months, and the good thing is there's a large holder base. So if you can actually win their trust, you can get a lot of liquidity flow in. But it's not as big of a market as BTC, right? So it's like 200 billion FTV. It's like 130, 140 billion market cap. So the next iteration is probably like after you do some XRP is to go to BTC or maybe Doge. Like Doge is interesting in a sense that there's still whales you can find, but that's treated as a full-on meme coin, right? Like people don't trust it as much as like XRP, and they're like, well, this is like people who mine Litecoin, they also mine Bitcoin. So that's the impression. So depending on that, like how XRP turns out, we're just going to grow to different assets and eventually like have our own sort of like lending platform, but we're not there yet. Like we basically use the existing lending platforms for now on Ethereum.
Are there a lot of lending platforms like accepting XRP as an asset? Like, how's that seen? Because you are like obtaining the yield from kind of native DeFi, right? People who are on crypto Twitter who may be looking down on XRP. So when you have to convince people to accept it as an asset, is that an uphill battle, or did that go quite easy?
Like surprisingly, all the DeFi protocols want it. It's just like getting the liquidity is the other side, right? Because I mean, XRP after this like SEC case has won some sort of legitimacy. Like people want it, like Solana people want it, Ethereum. I've talked to a bunch of people. It's interesting. And it's also an interesting marketing angle. Everybody that I talked to on AVAX, they're like, well, I really want this because we want the army to support us. So that's been the conversations. But we have a small term finance pool now. It's like 1 million just testing stuff out. We're not public. It's on like private testnet right now. So as we go like bigger and bigger, we got to go to Polygon, Arbitrum, Near, and all the other blockchains too, as more XRP grows.
Makes sense. Is this something, Connor, where you think like I need to get in on this now and actually do support like the Ripple chain with one click actions too, or?
I'm okay for now. We've got enough of DeFi and EVM to aggregate. We've still got our work cut out. So once we've conquered all of EVM and then SVM and then MVM, maybe Ripple, right? I'm not that close to the ecosystem, so I'd love to hear like what type of DeFi protocols are built natively on Ripple. I saw I think it was a thread a couple of weeks ago, and there's a vibrant DeFi ecosystem there that I didn't know about at all, actually.
Yeah, so historically, it is like Bitcoin XRP didn't have smart contracts, obviously, right? So like Ripple was actually the second, I think it was like 2012 or 2011 blockchain, and it was purely like designed as a payment network. They have just introduced smart contracts on the ledger. So there is some like meme coin, like all the Solana meme coin people just moved there. There was this like, almost like a gambling on meme coins, but it's not. It's like maybe 100 million TVL. Really, it's not a big ecosystem. there is like some lending platforms, but they're not like, they're not very attractive. So that was the kind of reasoning, is like, let's just take XRP deposits, take it out else somewhere, and then use liquidity elsewhere to build those markets. But yeah, so on-chain users aren't much, but there's a lot of people that are on Twitter or like Facebook, like Instagram. They're like, oh, I love XRP. We've tried one. So one of our advisors is Erica Kang, and I was just like asking her, can you put some like funny reel on Instagram about XRP? And we got like a lot of likes. So like there's a lot of interest on Instagram, apparently Korean girls, and like which was quite kind of funny to see. But it's retail basically.
Yeah, I mean, to me, it's like the number one like uncle coin, right? It's like my uncle will take me like at a Christmas dinner or something and tell me like, I have some alpha for you, right? Look at this coin, XRP. It's that and Pi coin. I remember he advised me on that one too way back. I don't know if you guys remember that.
Ironically, a lot of the time they're right. If we bought XRP back in 2017, it's like you're trading the value that people perceive the value to be, not inherently what it really is. And if I bought XRP back then, it would have been a really, really good trade. I just personally didn't buy it out of principles, but it's good to hear that it's definitely improving now.
Yeah, I used to do some coding for this guy, Mike, who was really early into Bitcoin. Now he lives in California, welding metal together into art sculptures. But he did tell me like he was there. I think like the Ethereum ICO, but even before that, like Ripple originally, before like they actually launched the chain itself, to get in on that too, because he really liked the idea of like owning his own money, like the payment processing part. But then the Ripple guy told me he couldn't run his own node. So since then, like I met Mike like 2016, is telling me what a scam it was because you couldn't run your own nodes. And Mike was like the truly like cypherpunk, middle of nowhere, own internet, that had to believe like if you're going to hold the asset, you must be able to run a full node as well for this. Otherwise, you don't truly own it, right? Like Bitcoin is worth something because I actually have like a computer in my truck that's running the full node, so I can check it myself.
Yeah, it's different value props, right? Like, I mean, the way they sold it is always banking, and people think that it's going to replace Swift network. Like that's the narrative they built basically, and they were very successful at it.
Yeah. Okay, so we have like Ripple at least being used on chain, really advanced DeFi on Berachain. That's maybe going over our heads actually. So we'll see where that evolves. And then Connor, you with Enso, I guess. What's next now that the Berachain launch has happened? Like, what do you look forward to most in DeFi? Like, I assumed turned a lot of protocols into Lego bricks now. Like, which are the most interesting Lego bricks, or which are the ones that you think like are going to be used most in the next 2 years?
Yeah, in terms of what people build and the complexity, maybe going back to your first question, a lot of people still do swaps, right? People just want to trade, they just want to make some money, so they'll buy some meme coins, some shit coins. And then the next level is whenever you're building an app, people start doing one deposits. So let's say USDC into Avi, or you want to enter into infrared, or you want to enter into other like basic protocols to some degree, if you want to call it that, with one asset. Then the third step is people start doing like LP positions into Kodiak, into Uniswap, and so forth. And then now, once you've done those three, people start creating like unique strategies. So, hey, I want to take my money from base, I want to bridge it over to Bera, I want to enter into this lending position, I want to loop it up to this particular ratio, I want to take the stablecoin that I obtained, split that into 2 tokens, to enter into an LP. But really, that's only about 5% or 10% of the types of actions that people do. Where I think DeFi is heading, I think a lot of it's going to be automated. We started Enso as a social trading product so that people could just kind of park their money and forget. That's what a lot of people want to do in DeFi. You don't really want to actively manage it. Nobody can frankly be bothered. So the more easy and convenient it is, the better. So let's say you put in 50K, if you can have a product maybe using Enso on Bera and so forth for automating yield across all these different protocols, I think that's how we're going to get a lot more people to use DeFi. People have kind of done this as vault products, wrapped up other protocols and then tokenized them. Challenge with that is you're adding an additional security risk on the smart contract layer. 2, also social risk. You're kind of trusting the vault managers to manage it correctly and not rug your funds because most of them are multi-sigs. And you can avoid all of this. You don't even need vaults anymore. You can just automate this in the background. Yeah, it's interesting. I think I'm going to go on a ramble, but I thought of an idea the other day, which is we're all isolating to DeFi to single chains. What if somebody was to create not another chain? We don't need more chains, quite frankly, but a DeFi protocol that could read state from all of your different DeFi positions on all these different chains. So let's say you're on Polygon, Bera, ETH, Arbitrum, and you've got like 10K spread across. Somebody should build like a DeFi protocol that aggregates all that information, and then you can use that to then borrow funds on this master chain. I think that's going to be a nice next step of this industry. I've not seen anyone do this or even talk about it yet. I only thought of it about a week and a half ago, to be honest. But I think that's where maybe this industry is going to start heading in about a year and a half, 2 years.
Rehypochain, basically. Just take everything and then mint static version and then just like play. Yeah,
exactly.
I've seen this before with a couple of different like, but they've pivoted. I've seen one pitch deck about this. I think it was called Mesa Network. But they pivoted. They're totally they pivoted.
Yeah, they're doing vaults now.
Yeah. But that was the first idea, is to get everything and then rehype everything and then use everything in the Mesa Network.
Yeah, I feel from a technical perspective that's still extremely difficult to execute. Like we try
state sync, right? You just need to sync with every chain, basically.
Yeah, so that's the thing. We do this technically underdoed with Union, right? Because we do like light clients, and so technically you have like the state root of all of the chains we connect to, but there's like some latency. Obviously, there's sometimes chains stop finalizing, for example, right? Like we had that with Ethereum testnet then with Holeski breaking, so then technically they give multi-day outages. So the DeFi protocols you built on top of this does need to deal with this being asynchronous, right? So it might be better just to actually bridge LP tokens or receipt tokens over, right? Instead of having this like state sync, you just bridge over those underlying assets to your like combined network, and then you can at least price those with an Oracle. That might be better, and then you can have like arbitrage opportunities built in as well to rebalance this. Still, like getting like a global consistent overview of all chains is like exceptionally hard to do, actually. And at least with Union, like we run into lots of like, I would say like not even algorithmic issues with doing this, but the amount of chains out there that secure a significant amount of TVL, but don't even have an archive node, which for those watching, like you kind of need an archive node if you're going to do like historic proofs. So if you want to do like the state sync, you want to generate proofs to show the state of another chain, you need people out there to provide like public archive nodes to generate these proofs. And I know of a couple of chains that have like many billions in TVL that actually don't have this. So you can't like get the provenance of the chain itself back anymore. Okay, Smokey, you guys actually have like really good RPCs with Berachain. So outstanding work there, actually.
I'm glad to hear it, man. I played 0 role in it, which is probably why it worked.
Exactly. So far, to be honest, our experience, like Zion and Bera actually have like the most solid RPCs, like off-chain infra. So like the most degenerate like public profile on Twitter, and then turns out to actually have like the best tech backing it. And actually like the really formal chains that have all of their like tweets be vetted by legal, they then turn out to just like have absolute garbage public infra. That's something fun that we at least observed.
Yeah, that's why Smokey's here, I guess, and talking. And the rest of the people are building. Yeah.
Okay, so to be honest, guys, I still kind of see this. Like we really started with like DeFi has changed a lot since 2021, but I kind of still hear that like vaults and like defragmenting assets still seems to be like the big thing. I've never actually seen like vault protocols take off that well. Like I remember Yearn and such, which was hyped, then went down. And so far, every other vault protocol I kind of saw like that was truly decentralized didn't do that well. Right now, I see the only ones doing well is like Vida, right? Like they manage all of the like
Yeah.
ETHFi stuff. Yeah.
I was gonna say, like, I think that it's almost like a different interpretation of what a vault product means, in that, you know, I think previously it's like, okay, here's your 2 and 20 per se, or, you know, here's your performance fee for allocating capital across crypto. I do still think that that exists to some extent, but like, you know, I feel like the use of a vault nowadays is a little bit closer for execution of a known or somewhat known strategy, or, you know, subset of those strategies, as opposed to, you know, toss your money here and trust me, bro, we'll do what's best with it. Um, not saying that it was necessarily like the most opaque in the past, um, but I think that, like, you know, what vaults do more than anything else is just provide a simple user experience, right? I don't think they're perfect by any means, but I think that they're simple enough for people to work with, and that they're like, okay, cool. I put my capital here. I get this thing that shows me I put my capital here. Maybe I can do some other shit with this thing and borrow against it or something or the other. But so be it, right? Um, and I think going back to things that, like, you know, each of you guys are working on in different ways. I think again, a side effect of like the speed at which crypto has like evolved towards, or like the speed that people are looking for in terms of returns, or in terms of you know, engaging in anything on chain. Vaults kind of make sense too, in that like people don't want to like click 3 buttons. People want to like click half a button and just have their shit done. And I don't think that that's actually going to go away. I think as a society, as a generation, as a bunch of terminally online people, we are probably more trigger happy than we have ever been. So, you know, I don't think I don't think there's been like a yearn like product in the same way as there was in the past. But I do think that more and more asset managers are actually, you know, using their vaults, you know, in a perhaps an obfuscated or effectively abstracted way, perhaps more than ever before.
Yeah, I think back in the day there was like Purple, Index Co-op, Token Sets, PiDAO, D-Hedge, there's a couple more, Yearn obviously. But I think the kind of target customer is completely different. So that was like retail entering into that, whereas like Veda, Concrete, all of these vault managers, they're creating these strategies like Smokey was saying, and then they're working directly with protocols. So whereas, for example, like Enso V1, we're like, okay, anyone can create a strategy, everyone has the knowledge. It's kind of, we learn very quickly, not really true. And now Veda and Concrete, what they've done very well was, hey, we'll create these strategies, but we'll directly work with projects like EtherFi and whatnot, so that there's TVL secured from day one, and that EtherFi can then focus on something else inside of the business, right? Instead of creating these vaults, managing them and whatnot. I think most of EtherFi's TVL goes through Veda.
Yeah, and I guess like the vaults obviously have to work, right? Because smart money does actually deploy into it. Or at least like I see a lot of TVL being in there, and I see almost every successful Ethereum DeFi protocol spin out its own credit card at some point, right? To provide you with the yield that they're providing. So it's all transforming into neobanks. So something must be working under the hood here. But to me, at least, it feels like the same names actually. Like I see VDAP pop up every single time. Again, when I see something like cross a billion TVL, and then they spin out a product like this.
Vita was actually like sommelier, I think. It was sommelier.
It was
A lot of overlap
the
there. It was a
managers
Seven
of
Seas
Somalia.
guy. Yeah, it was a Seven Seas guy. He sort of rolled over, I think. And Somalia was like very cool at one point as well, right? And then I think they were using, if I recall correctly, like a Cosmos app chain to manage execution on ETH in terms of like Aave, et cetera, and allocation of funds, right? Yeah, man. Like, I mean, I feel like the shit works. It's just more of a question of like, you know, where's the yield coming from? In many cases, that feels like the most relevant question. I think the EtherFi guys have done quite a solid job with that, and of course they're also pretty involved in a bunch of stuff on Bera too. So some bias, of course.
No, they're great. And the ability to obviously shift. You know, I think if you look at LSTs, LRTs, ETHFi is the only one that became, I think, still kind of relevant. The rest just,
Yeah.
you know. yeah,
everyone
they were
was
the winner,
Eigenlayer
obviously,
beta.
on that. Yeah, but that's the interesting part.
100%.
Yeah, we haven't actually seen many of the Eigenlayer AVSs generate yield, right? I remember all the hype was like, finally, there's going to be massive yield generation for this additionally staked ETH, so this is going to work out. But did any of the AVSs actually manage to do that in a constructive way?
It's only Eigen paying, right? The EigenDA is paying some rewards. The rest is like, infrastructure is hard to generate fees on, right? Like if you're building infrastructure, especially like we have a message passing layer that's built as an AVS, like the fees are just like zero. Like you're competing with Wormhole and they're zero. And it's like, that's not the main part that generates money. It's the trading fees. It's like people coming in and buying, selling perps, people buying and selling tokens on AMMs. So if Eigenlayer could be used as that, like that's probably promising. But apart from that, I think apps will probably generate revenue.
I think the way it's actually sort of evolving from what I've seen a little bit like at arm's length, right, is, at first, everyone thought that we cared as an industry about security. And then I think it became very obvious that no one cares about security. And then I think that the narrative end has to evolve a little bit for something like Eigenlayer, Babylon, etc. Right? Maybe a little bit less so for Babylon, and that like there's a different narrative to be said for Bitcoin security, in terms of censorship resistance, so on and so forth. But I think that what I see, at least in a somewhat uneducated manner from the Eigen ecosystem, is like the appetite to take that unholy amount of ETH that's staked in, or basically beholden to Eigen in some way, and rehypothecate it for cases that are not purely security, which I think is kind of interesting. Like I almost guess like Eigenlayer is like a merchant bank for ETH of sorts, but that's kind of funky to me. And we're seeing a couple of products try to do that, but of course it requires a lot of coordination, and I think a few different parties working together, and that you have like, of course, the LP/ETH stakers in the first place. You have the protocols that are ideally actually going to generate the yield. You have Eigenlayer, and then you have their operator set. So you've got like this funky like 4-ish way marketplace that you have to make happy, which I'm sure is its own gnarly coordination problem. But they also have enough capital there that if they find enough places to put it, perhaps there's a lot of upside there.
Yeah, this might be my smooth brain interpretation, but I always saw Berachain as kind of the inverse almost of Eigenlayer, where you guys almost seek to like stake less assets unproductively in security, because you guys felt like everyone is overpaying for security. And Eigenlayer almost doing the inverse, taking like assets normally from DeFi, right, receipt tokens, and staking those in security again, because there's a belief that stuff needs additional security on top of that. So I'm very curious to see that play out over the next 2 years, see who's correct here.
The secret answers that we're all wrong. I have no idea. We'll find out.
I definitely think on the Bitcoin side, indeed, like from a narrative perspective, it's a bit different. Like Ethereum indeed has to compete with Solana, right? And it's also like, do we value all of this like really theoretical security stuff or not? I feel like the Bitcoin crowd indeed thinks very differently about this, maybe more long term. I feel like they all have a somehow internal belief that like in the next 2 decades, Bitcoin will go to 10 million, right? And so the name of the game is like, don't lose like the 2 Bitcoins that you've saved up together, right? And maintain those at whatever cost, like maintain security, because like the victory is inevitable. I think at least like in the price charts, do see at least this reflected as well, right? Where somehow Bitcoin keeps ending up on top again. And every time I think like, this is the cycle where it finally dies, it succeeds once again.
I used to see no value in Bitcoin because you couldn't build anything on top of it. The longer I spend in this space, which is 9 years now, I see more value in Bitcoin every day. It's the true representation of why we joined crypto.
I think that might be the most representative thing as well, because Karel, you're asking about like the the pre/post TG experience, and I think the number one thing I can say is that in a recent launch meta that has basically been like the scam cycle, or like the turbo crime cycle, where like if you if you look at the vast majority of recently launched coins, and you look at their listed float, versus like their real float, you can sometimes see like very meaningful discrepancies. Bitcoin's a very interesting like counterpoint to that. It's like there are no KOL deals. There's no market maker with 5% of the supply. there are no spicy kickbacks. There's simply, you know, some random motherfucker who started mining Bitcoins a long time ago or allowed the world to mine Bitcoin. So I think that's kind of funky. Also representative of a very different class of capital, right? Like even when we look at this recent move up, it doesn't seem like it's been, you know, retail driven. It seems a lot more like, you know, institutionally focused, which is kind of cool as well, right? Like I think I think people have remarked in many different ways. It's sort of like the deadest or like the least exciting set of all-time highs that I think people have seen. Whether that is the fact that, you know, people on the internet and you know, all folks like us are more playing lottery tickets than they're playing, you know, hard assets like Bitcoin, or just sort of a sign the space is kind of maturing. But sorry, going back to my first point, the number one thing to keep in mind, as all you guys, in my opinion, go towards TG at some point, is that the number one thing that'll affect, you know, your sentiment and or your network effects is 100% your token price at different points in time. And like, I don't think that's rocket science, and I don't think that's like a particularly hot take, but it is also something worth keeping in mind as you guys think about your different like go-to-market / rollout strategies, right? In that it's also inherently very, very reflexive. In that like everything in crypto is reflexive in different ways, but price is interestingly reflexive because then it ends up being downstream of community formation, ends up being downstream of the ability to acquire, let's say, a TVL or more interesting applications. Everything sort of rises and falls in parallel, unless you manage to build up a user base or a holder base of folks who are decorrelated to that reflexive world, right? That's why something like what MoreMarkets is doing is also interesting in a different way, right? In that you guys are actually not catering to the world that I think a lot of people in our space are forced to live in to an extent in terms of like CT and that audience. You're playing in a different, you know, at a different playground. I think one could say the same in a different sense about Enso, in that like a lot of users are not actively thinking, oh man, I'm using a fucking Enso Zap right now. They're just like, cool, I'm using this shit and it works and I'm making money along the way. And I expect it'll be relatively similar with Union in that I imagine you guys will not be in people's faces. So I think there's a hidden benefit to being infrastructure as well, but also worth always keeping in mind that your ability per se to go wide or small on certain things will definitely have a correlation to your position in the market. And that's also one of those things that can be very interesting if you tell the right story with it. So yeah, that's the biggest change that I think you see pre and post TG is you're like, instead of everyone yapping about you because they think they're going to get some points on like Kaido or Cookie, etc. They'll hail you either as a hero or a villain depending on whether the chart's green or red.
Yeah, that's something
we really that brutal.
Oh, totally. Yeah, totally. I think that like you have the it all sort of just goes towards what I said before, right? Like people are very used to press button, get 10x, 100x, or 0, right? And I think a lot of the world in between is tougher for folks to grok nowadays. And I don't say that from like a salty point of view. I say that just from like it's a reality of like the audience, which is to say that, and I've heard this from countless other founders after TGs. There is always 100% like a group of the community or a group of like your users, etc., who are like diehard in a sense. But I would take the bet then like in the majority of cases, 50 to 75% does not fall into that category. But very nuanced and case by case, in my opinion. But that also means that like it's one of those things where as quickly as it goes away, it can also form. So I mean, just like roller coaster it out, right? It's pretty chill.
Yeah, it's higher risk, but maybe higher reward to launch like a low FTV. Low FTV, build up community, get strong holders. Challenges if it goes low and nobody buys, right? You're kicked.
There's careful things there. There's fine lines that should never be crossed.
Yeah, it's almost a risk that a lot of people didn't want to take this cycle, right? Which is there was some like Hyperliquid started with like 2-3 billion FTV or something like that. It was very low.
For sure.
But then they had a product that was working, and they already knew they had an army, right? So like,
they had like 200 million USDC or something to buy Hyper during the first week as well. Like
they have money, right? They have cash. Yeah, it definitely helps because not every founder has 200 million that I can buy. I mean, the product has been successful also, right? Like people have been buying and selling. Like I think they had like I didn't. hear about them as much, but they have a die-hard community that they built.
Yeah, they had everything, right? Like a direct user base product that was generating insane revenues, and then a whole treasury already ready to go for the token launch.
It's an exchange.
I mean,
like it is an exchange. It's an exchange technically.
They went for like the power traders, power users of the whole space, made them all really, really rich, turned every single person basically into KOL in the whole ecosystem, and it's worked really, really well for them. But I think what everyone's mentioned is really, really valuable. That can only work if there's a real product that people use.
Yeah.
You know, I use Hyperliquid maybe 2 or 3 times a week, and it's a useful product. It's not fugazi.
Use it every day.
You know, yeah. Every day. Wow, you're trading a lot then.
Yeah.
Every day. But I still have a Bitcoin long. I still wait, which is good. Because my brother's in TradFi, and he's a very good trader. He's a commodities trader, and he texted me. He's like, "This shit is gonna break out." And I was like, "What? 104, 103?" And he looks at it quite often these days too. He's like, "Bitcoin has evolved to be something else than the other stuff, right?" So people look at Bitcoin everywhere, basically.
Yeah, I think just important to note for people listening in, like it might now sound like 99.9% of people building crypto don't actually build products, and that's why that token fails. I think that's also quite unfair. Like to build a product like Hyperliquid is also extremely difficult, right? Like there's like thousands of builders here building like real products, but to get one like that successful, it's like the App Store, right? It's like people build 100,000 apps a day and then release them, and only like 5 get in the top and actually have meaningful downloads.
Yeah.
Like, it's difficult to have everything that well in place. I think you need like a bunch of luck as well, to be honest, and execution and timing.
Hats off to them. They're only 5 engineers. You know, they're 5 internal engineers at Hyperliquid. They're killers. You know, one guy, his release, maybe you saw the tweets about Coinbase 2 weeks ago saying, "Hey, we released the ability to put charts on
for our candles."
Yeah, candles. It's like, all right. And then Hyperliquid releases like 5 different new pages. You know, they're 5 people, but they're killers.
Yeah, that's what you can do when you kind of have a more centralized product, right? You see the advantage when you can just roll out and push this stuff. I guess like MoreMarkets and so you guys struggle a lot more with this because you have to integrate all the people stuff all the time instead of just have full control of the stack yourself.
Yeah, I mean, we're going to be opening it up for. Oh, sorry. We're going to be opening up so anyone can start adding their own protocol. Like we've started to see this flywheel effect now, where DeFi Llama is a industry standard for fetching data, showing data. So day one DeFi protocol, you need to do a PR to show on DeFi Llama. Now people are reaching out to Enso to say, "Hey, we've deployed this DeFi protocol. We want to be available." So we started adding like select teams into a private Git repo so they can just add their own protocol themselves. So it starts to become this self-service system in which the Enso becomes the de facto infrastructure play for how you interact with DeFi. And day one, DeFi protocols, you need to be available through Enso so you can get all this top level distribution of these partners that are currently using Enso. So right now, sure, we do build some of these integrations ourselves. You'd be quite surprised in the flexibility of our tech stack that we're able to add protocols safely and release them very, very quickly. You know, our record time from request to release was 30 minutes. So it doesn't scale inherently once there's maybe millions of applications on chain that we build it ourselves, but right now it's fine. Yeah, hopefully soon, maybe in the next couple of weeks, there'll be a tweet that will announce anyone can start doing self-service. And that's a really nice position for Enso to be in because we can transition our focus away from purely just integrations. You know, now it's presenting even more use cases, building many applications that can be done to also present the power of Enso. So yeah, hopefully that starts opening up in the future.
Very cool. Yeah, I mean, I've been asking you about this indeed because I wanted to do this for union rights, create like basically all of the functions you can call with union specifically in Enso because it aligns very well with the model. I really like that. It's almost like its own lightweight like programming language on top to unify it all. Guys, I think we're like 5 minutes over time, and I know all of you are ultra busy. I have other stuff to do. Connor, I know you're sick with COVID and you look like you're dying, so you should.
Do I?
Alrighty.
Altan, great having you on. So very interested to hear about actually, because I was checking out MoreMarkets. I thought, what is this? Sounds quite generic, but very cool actually, the approach that you guys have, and I actually think it's going to be massively successful. And Smokey, thank you so much for coming on and throwing some wisdom to us founders.
Of course.
The future
Of
beholds.
course. Take care, guys.
All right, take care,
Thanks,
everyone.
guys.
Ciao, guys. Bye.
Bye bye.